What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, guys, quick midday video following AMC popping about 30% and GME halting both to the upside and the downside. Got a lot of people reaching out to me, asking me a couple different questions I'm going to clarify in this video. So let's get right into it. Before we do, I did not make a video yesterday following this CPI miss. Analysts had an estimate of 8.1% and it was actually 8.3%. It is a sign that continuously rising inflation is starting to slow. However, core CPI, which excludes food and energy, was also higher than expected. I said in my previous videos that the price of fuel, especially diesel, had me worried on the overall inflation numbers. And although we're excluding food and energy, the core CPI was elevated due to transportation and airlines as well, a big focus, which does kind of siphon into the fuel sector because obviously planes burn a lot of fuel in all of your public transportation as well. I will point this out, that 385 to 390 level is very enticing. This is actually a screenshot that was taken from somebody else inside the group from on February 23rd. We were talking about those W patterns that the SPY was forming. I was like, are we going to push through 458 or drop under 400? I can see us pulling under 400, but it will not last long. As I said yesterday, there are trillions sitting on the sidelines. Obviously, with margin requirements and liquidity requirements are changing that a little bit. There still is a lot of money on the sidelines. And today we saw a little bit of that. So some people had reached out to me and said, hey, is this part of the short covering? Are there shorts covering? Could be a potential for very, very small, either retail or small funds doing a small percentage of covering. But here's what really stuck out to me. This is GameStop, which started to pop quick or before AMC started to go. And if you look at this volume here, this is in the 5-minute chart. You've got 270,000 shares, 200,000 shares. There wasn't a massive amount of volume. This big volume candle was the selling coming after this initial pop. But leading into it, there wasn't a lot of volume to cause that. So basically what that signals to me is that somebody is holding this up. And the same thing happened with AMC. There was more volume in on it. Obviously the float is a little bigger, and just because the sheer price point is about close to 1/10 the price of what GameStop is, naturally you're going to see more flow coming into it. But I don't think this was a massive short. You saw what happened back in June when some of the shorts were squeezed out of it. Obviously, the ones that capitalized on the upside to bring it back down as well. But you saw the power that was behind it. However, the biggest thing that sticks out to me is that one, there's still attention all over Twitter, Discord groups, Weeble chat. Every single chat room was talking about the meme sectors starting to go. Having attention still on the stock shows 100% that the play is not dead. Keep that in mind. Next thing I do want to mention very quickly, I'm going to go over one quick article. Look at the stocks on my watch list. I said this to everybody inside the group. We have the SPY and QQQ both red as of now. However, you have a certain sector of stocks that are up. Not talking about the EV and Rivian or specifically gaming stocks or financial stocks, Affirm and Upstart. You have stocks that are heavily beaten down that were once high growth stocks, and you're starting to see potentially what could be a shift back into these growth names because they're beaten down so much. Look at Neo, all right, which is beaten down all the way down to 13, 12 bucks. Okay, and it's starting to see a little bit of movement coming back into it, especially Roblox, Rivian, Affirm, Upstart, heavily beaten down. Like I said, that high growth sector. So look for a potential for rotation to start to happen. Doesn't mean it always does happen, but look for that start to happen, because what happened last year, and I said this going into the summer, was that you had a big shift into your cyclical stocks, your Home Depots, your Costco's, your consumer staples. Then we saw the big shift into your blue chip stocks, okay, your Apple, your Nvidia, your household names as well. And slowly you've watched all of those blue chips just been bleeding with the entire market, but high growth was that first one to take the initial. The reason why high growth always falls first is because they're valuated off of future revenue and they need to continue to borrow money to grow. And obviously when interest rates go up, it costs them more to be able to borrow the same amount of money. When you slowly start to see that opportunity coming back into it, could be a good sign. Like I said, money was coming back into the market. I will say this once again, I don't think we have reached bottom just as of yet. The pops that we're seeing do not have massive volume behind them. Once you start to see the really big pushes, those big green candles, okay, across the indices, that is going to be a sign that money comes back into it. Here was an article that was written, of course, by Benzinga, saying that potentially shorts could be covering. Like I said, guys, this is only going to be your retail shorts or your very, very, very small funds. You would see a much bigger jump and a lot more volume pouring into this if this was exactly happening. But so, guys, that is it for this video. I'll see you in the next one.